20 minutes left, chat. Yeah, 10 minutes left for comics open. Then you have about like 22 minutes left for news here. So, let's take a look here. So first off, you got the monthly candle on gold here. Now, if you guys take a close look at the monthly candle on gold, you're gonna notice that there's this resistance on price here in these ranges here at 2000, right? And then there's also like this support down here, or no, not down there. I'll say more so down here as your most recent support, right? This is just to put it in simpler terms, this is just a range form, right? This is just your resistance right here, and then this is your support right here, and this is just the range you're in. So you will continue to move, but you will continue to move if you close above the range for the month. And you obviously have like 4 days and 9 hours left, right? If you guys take a look to the right, you're gonna see 4 days 9 hours for a close. That's the week, that's the monthly close. So that'll be the 1st of November, and then the 1st of November you also have FOMC, so keep that in mind as well. So if you do close above the range for the month of October, I'm assuming next month you should be good to make all-time highs. Again, it comes down to how strong you close as well, if there'll be a top wick and all these other factors, right? So as we get closer to the date, we can start judging it based off of that. But as of right now, we're still below. So at any given point, again, you can just close at resistance, and that's okay too. Closing at resistance isn't necessarily a bad thing. It'll be more so of like, it's like a, not a sign, but like more of a confirmation that next month may not be as clean as it would be if you were to close above, right? Because you're closing at resistance. So like we're closing above at resistance, still closing bullish. You're still expecting price to drive up. However, any given point during that month of November, you can drive up, make an all-time high, and just flip bearish for all I know, because it's still respecting resistance, right? So it's gonna be very key whether or not if we can close above the range. If you don't close above the range, then again, this can happen. If you do, then you can probably look to drive up further. If you close bearish, right, which I highly doubt it, it's like there's like a 95%, 98% chance that we won't close bearish on the monthly, because for it to close bearish, you need to sort of come down here to 1840 in about 4 days. So you definitely will need a catalyst, and the next major catalyst that you have here, or next major news folder, is FOMC, which is on November 1st. So it doesn't make sense, right? I highly doubt that will happen. I'm pretty sure we'll close bullish. It's just about where and how we're gonna close, right? But that's just like the monthly time frame. Again, it's the higher time frame. You want to like just make sure you understand the higher time frame, even though you may not be trading it today. You know, like I'm pretty sure the higher time frame, which is the monthly, has nothing to do with our 10 pips today, or whatever range we're in right now. It's just good to have an idea of where the monthly is going as you're doing your entire analysis, right? Because you want to be able to do your analysis from top to bottom, from the 5 minute all the way to the monthly, right? You want to make sure you have all the angles covered on price. So that's why I do my monthly analysis every day, even though we don't really take advantage of it much during the stream. Now the weekly is key here today. They're very key here because it's the last day of the week, and what was that, chat? It's the last day of the week, and it looks like, I mean, last week it did close above here, right, on last Friday, and this is your next resistance, which is up here. So this is like the range that you're in right now. You know what I mean? It's like you're in this range, you're breaking back into it, and I would assume that if this is the range you're breaking back into, you'll be able to come up and fill the range, right? So as you come up and fill the range at 20,000, it should be able to mirror this range to the left, which is going to be this green box here on price. You know what I mean? That's what I'm assuming. Now the issue is you have a day left, which not even a day left. You have like 8 hours and 47 minutes left, so that's not a lot of time, right? But what you do have today is you have folders until you have folders at 8:30, and then you have folders at 10, and then after 10, I'm pretty sure again that you have direction just like you did yesterday. Right? Yesterday you had direction after all the folders came out a little later, but today I'm assuming it should be around 9 and 10, or 10 and 11, within the same time frame as yesterday, maybe a bit earlier. But we should be able to drive off of what the weekly shows us. Now I think the daily will play a big role today too, because obviously it's a daily closure, and I have no idea how the day close. So let's take a look at that real quick. Yeah, daily close above the range. Okay, so that's a good sign. That's good, because the weekly, this entire week, again, we were expecting the weekly to kind of fill the range, right? Because it broke back into the range, and your next resistance is at 2011. However, you haven't made that push yet. And if the daily is closing above the range for the first time for the weekly, of all the days you had this week, the probability of you driving up is the highest today compared to what it was this entire week, right? There was no other day this week where it had a higher probability to drive rather than today because it closed above this range here, right? And notice how I said probability because it's not a guarantee we're going to drive today as well, right? For all I know, price might need to make more liquidity for all before driving up to retest the highs, right? But the good thing is that if you look left here, you can notice we have a similar mirror on price. And look, you close above this resistance here, 1982, right? Above this range here. You look left into this pink zone here. What do you guys notice here? Right, so let's just forget about like all of this. This is like irrelevant. This is all irrelevant. For I know you need this information down here, but I'll leave it up for now. But like I'm looking at this, right? I'm looking at this pink zone here. Right, you have a very similar area on price. I'll say more so right here. Very similar area on price, which is right here. Right, you're gonna notice. It's a little too harsh. This is better. Look, so you're gonna notice it's the same. It's basically the same move. You had that bullish push, right? You slow down within these ranges. Why? Because you're tapping into a major level, right? And then you grab liquidity, right? In the past, there was once a level you grab liquidity here, but there's also times where you grab liquidity here, right? Within these ranges here. So if that's your bottom wick on price, and then now you have a bullish closure above the range here, which price did it right here, close above the range, close above the range. Where did you drive up last time you closed above the range on the daily? You drove bullish up towards the top of the range, right? You create that move up, which was this. So could the same thing happen today? There's a possibility, right? Because you have the same mirror on price. That's your resistance up there, right? This is your closure. Those two zones are aligned. This is your resistance that aligns. This is your bottom wick, right? That roughly aligns as well. So I would assume that if you are closing above the range, once price creates a bottom wick, again in the past the bottom wick was right around here. If you create a bottom wick tapping through roughly those zones, I would assume that that's enough for us to drive up to retest the highs, right? So my next target on gold today on the daily, I mean 2020 is like, you know, where price went last time, but it doesn't necessarily always have to be the target of the day. Like you can have that as a target, but it doesn't mean you have to hold until that target, right? There's levels that price will reject on the way up towards there. There's levels that price may struggle at. So you can just grab the little piece of the move. You don't gotta grab the whole entire move if like, you don't gotta force anything, you know what I mean? But yeah, there's a resistance here at like 1995. There's another resistance up here at like 2005, right? So those are my key levels today. If I'm looking for buys today, I'm looking for buys going up towards 1995, and then I'm looking for buys going up towards 2005, right? So like that's the move I'm looking in the mirror on price on the daily. So that's what we got going on the daily, which is a good thing. So obviously we're bullish today. Keep in mind that bottom wick area is where that bottom wick area was. Let's see. So you have bottom wicks here, resistance, 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 resistance. I guess we can probably connect the dots here, to be honest, using our special strategies that the banks don't know about, right? So hold on, that's that. I'll say your rough area, I say around here. Honestly, that might just be the bottom wick for all I know. So like, what is this? What level is this? This is like 1879. Okay, cool. So let's go down to the smaller time frame and see where we can get buys at today if we were to get buys. First thing I noticed on the 4 off rip is that the 4 is respecting support still, right? So just looking at this zone overall, like just off rip, you can probably obviously see it, right? But like you kind of had some push, a push up here, a bullish push up, right? Cool. You then formed a resistance here on price. So there was once a resistance formed here, and then you had like a support formed here. Basically, this is the range that you were previously in, right? And that's the range where you spent a lot of time in the last couple of days, right? The last 3 days. But you notice that you're starting to break out of the range here. You broke out of the range over here, I believe, in this zone here, in this green zone here, right? But you broke above, and I'm assuming there wasn't enough liquidity. But remember how yesterday, chat, I'm not sure if you guys remember this, but I mentioned how, I think it was yesterday when I drew this out, but I drew this out like very like right here. I drew this out. I drew like this and this, right? And I mentioned the lower low, the higher low being created on price, right? Price isn't breaking structure. So even this yesterday on Thursday, I mentioned how The only difference between this and this was that this one actually closed back inside the range. But I think basing it off of previous levels that you respected, price closed piercing the range as well, but then it just made a higher low, right? And you're gonna see prices respecting the higher lows. It hasn't broken the lower lows yet, right? Therefore, you still have bullish momentum to drive, right? Like that's what that means. You're still in a bullish trend, obviously, on price, on the daily and everything else, right? And then you close above the daily range as well. But if this is the range you broke out of, and then all price did yesterday was create a higher low, right? And then it closed back above the range, doesn't that indicate that we're still bullish? And then today's candle, if you guys take a close look real quick, right? Again, you respected this support to the left here at 1885, 1884, right? This candle here is still open, so you have about 40 minutes left, but the chances of you flipping bullish within the 4-minute candle is very high because you're still respecting support. If 9 comes out and I guess 9 a.m. closes bearish below the range, sure, you know, you can probably look to do to maybe create a new higher low or even break back into the range, right? This can happen, but you're going to be more open to the idea once you actually close back inside the range. Whereas right now, the idea that you're open to is the fact that at any given point it can still respect support, right? So it's not about being bullish or bearish today. It's more so about how the time frames are lining up, right? And what leads you towards your analysis, or what leads you towards your playbook the most, right? And in this case, if you broke above the range, broke back into the range, higher low, but you're respecting the support still, right? This is the keyest thing, I'll say. Understanding that you are still respecting these levels here. Man, there's any given point, this thing can just flip bullish, right? And if it does flip bullish, then this is what you're gonna see. You're gonna see a bullish candle, and then you're gonna see more buys going up, right? So drop down to a small time frame, okay? So you only have 30 minutes left, so you can't really do much. Well, there's not much you can really do but look at the 30 and look at the 15, right? So let's plan that out right now and see what we can grab for buys, if there are buys. Again, I'm just worried about news, but I think at the news here, we should be good for some potential positions. Right now, it's Comics Open, 820, so I expect some volume here. That's why you've probably seen this push. And then, you know, 830, news comes out, 835, 840, you may get positions because this news could be a pretty strong folder that may end up flipping the 4-hour candle, or it may just create a new low on a 4-hour candle, right? But it doesn't matter how price comes out, positive or negative, it doesn't matter. How price reacts to the markets is what's key here. So I want to see what happens at 830 and 835, and then again, our positions will have potential at like 840 to 845 today. I wouldn't mind trading the last 15, the 4-hour candle. Why? Because we would expect a pullback, right? But since today you haven't really pushed up anyway, so what's there to pull back on, right? It's like if we pull back, great, we'll get buys regardless, right? So that's your advantage point you can probably take advantage of. It would be a different story if prices are already bullish like this in the 4-hour candle and it was the last 15, and yeah, you can probably expect a pullback, right? But like, what's it to pull back on? You haven't really made a move yet. You've just been ranging since, right? So again, not really worried about the last 15 of the 4-hour candle today, and we can probably take buys going into the 4-hour candle if there are some opportunities here. But yeah, that was Comics Open there. Probably why you see the push there. Okay, so if we are expecting the 4-hour candle flip bullish there, right, where's your next resistance on price? So let's go ahead and draw this out real quick just so we can have it up. Next resistance looks like it's gonna be, why is this locked? Yeah, so next resistance is gonna be up here at 92. I think we mentioned 95 and 2005, right? Those were the two levels we kind of mentioned today on price. So yeah, I'll say around here will be your next resistance. So this is like your current range here. This is your current resistance on price, and then this is your next resistance on price up here at like 1994, and this range is like 100 pips, right? So it's a pretty decent range here. Any given point, this 4-hour candle could flip for us to drive up. Again, 90 pip range going up. Right, that's your next target. Again, overall target for a day was 2020, but I mean it's a stretch, right? But we'll see. There's still possibilities, but we're looking to take it from range to range for now until the price shows more signs that it will continue to drive past 2000, right? But for now, let's just worry about just 1994. So if I'm looking for buyers towards 1994 here, I'll say today we can probably use the 15 or the 30. I'll use the 30 since you have news here in about 6 minutes here. So I'll put this as my resistance up here at 1992. I'll say honestly, anything above 92 should be good to drive because you should have clean traffic. So above here, 93, yeah, that should be pretty good. Above 1993, you should have clean traffic driving price up towards, like, I think it was, should be around here somewhere. Yeah, around like 1998, I'll say, for the decent range. You might have a minor level as well, like right around here, I'm assuming. So let's take a look. Yeah, 30-minute resistance around there as well, right? So 98, 96 is like your roughly, there's a rough target, I'll say, for buys. But above 93 though, you want buys, right? So I'm gonna put this here as buys above here. Closures. We could also be in a situation to take wick entries as well, but again, I believe for wick entries, I would prefer seeing a move down first. So I would expect price to drop down further just to print that daily bottom wick, right? So they can line up with that candle to the left at like 1977. So let's go ahead and put that line there for now, just so we can take advantage of that daily bottom wick. And it makes perfect sense here, right? It makes perfect sense. You're going to see that there's a resistance up here on price. There's also your support on price as well. Let me go find that, where that is, but there should be a range in here. I think it's right around here. Yeah, it should be right around there. So that's your bottom of the range, right? Before I draw a line, let me just make sure it's there. Be in these ranges. Yeah, cool. So this is good. You would want this 30-minute candle to close above 1883.148, because if you close above, you can rip down the next candle. But since you're still respecting that support 1882.874, there's a high chance you can still flip bullish, right? And I'll show you guys why in a second here. Let me just make sure I have the levels marked up to the T here. All right, right there should be good. Yeah, 1883.148. So as long as price closes above the range like this, what I would want the next candle to do, again, I'm not looking for sells just yet. We could be in a position to do so, but right now, at least not. I want to see a bottom wick. So if the next 30-minute candle for news here breaks the lows and does something like this, taps like 78, I'm looking for buys there. On the flip of the candle, right? On the flip of the candle. So, I mean, there could be potential for a wick entry, but I'm guessing for a wick entry, I'll prefer the 4-hour close, because at least we can confirm that the 4 candle will continue to drive up once it closes. But if we don't have a 4-hour close for another 30 minutes here, you might as well wait for the flip, right? Because if you create a bottom wick and then you reflip bullish back into the range, there's no reason for that reflip if price wanted to drive down. Therefore, you'll probably see a move up going up towards 1993, and those would be your buys, right, on the flip. So this would be your entry roughly in this zone here. The flip going up to fill the range. Your next, I guess you could say, break-even point, advantage point will be like 1990, right? So you're expecting the range of this fill, or the fill of this range, and then your overall target could be 1993 or again 2005, right, with the daily target. But this 78 level, again, it will also be the daily wick, right? We mentioned that as well. The daily wick in the past did tap that exact same level, so I'm assuming the same thing would happen today as you tap into 78 before driving up. If you get a wick entry, great, you'll have a better entry, but if not, then it's fine as well, because you know there's a very high chance once you flip, you'll fill the range, and you can just grab that move instead, and at least you'll have a decent stop as well, because you can use the current day low or 4-hour low to stop, right? And then as all that is happening, you have the 4-hour flip and fill the range as well, right? The 4 candle will then flip bullish and then do something like this on price, right? So obviously 4 reverse zone low, it'll tap 78. If it doesn't continue to drive bearish, it'll flip bullish, right? And then that'll lead to buys going up towards 93. Make sense, chat? Right? Because that's the range that you're breaking into. That's the range that you're currently in right now. So it has a lot today to do with the 4-hour candle and the 30-minute candle here. Or honestly in the daily bottom wick, right? But again, wait for news to come out, and then 835, 840 should be your positions today, and it should be a pretty good position for buys. Now for sells, different story. Sells is possible again today as well, right? We could take sells today, but as of right now, I would prefer sells if like price were to like close below in the 4-hour candle bearish, right? I'll prefer a 4-hour close, because then we need more data to print out ideas for sells, or you need a bearish close there on the 4 below the range, and then you need a top wick at 93. So if for some reason, you know, you close bearish on the 4-hour candle below the range, the next candle comes out, creates a top wick at 93, I'll take sells at 93, or I'll take sells on the flip, right? Because then you can take advantage of this pull, or you can take advantage of this pull right here, right? But you need to close bearish back into this range to identify that. Until then, you're still respecting the strong support on the 4-hour candle at 83, and until you actually close below, there's no confirmations for sell just yet. but there could be after 9. So again, this is a very there's a reason why I'm waiting for a bottom wick. There's a reason why I'm waiting for a flip and not taking wick entries, because there's no direction just yet, right? But after 10 and like 11, you can start taking wick entries, I'll say today. But until then, you have a couple folders and you don't want to be taking that risk just yet. But yeah, that's what I got going on gold today, chat. So